We are back at it again here with another video with Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. And here we are with the SPY, the S&P 500 index, actually pushing up here after this slowdown here that we talked about on Friday. We're going to talk more about that in today's video. But within the volatility, our SPY bot, since 7:05 a.m., sent out a bull indicator. And from that moment forward into the bell and after the bell, there was a continuation of strength. The inflow stayed above the midpoint and call options went up 300% plus within an hour, guys. If you guys want to receive this clarity and edge over the charts, you can now gain access to it as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots and becoming part of a growing community of investors, all using these resources to maximize within the volatility, whether stocks are going up or going down, and you can now gain access to it as well. Once again, that link is down below in the description. So here we are with the SPY, and as I stated on Friday's video, things were slowing down here, and it was getting very interesting because when you zoom out, it's still up from the lows that we hit on Thursday, almost creating that staircase effect if momentum could continue. And here we are pushing up higher, and we're going to break it all down in today's video. But before we do, I want to share with you guys the home run opportunity that was mentioned this morning over at the Discord. So the home run of the day was spectacular and beyond expectations, and if you guys want to know about these stocks early on in the pre-market and receive this edge and clarity over the charts, check out the link down below in the description to the Discord, and by joining you'll become part of a growing community of investors all looking to learn and grow together. So the home run of the day was from our Tesla bot, sent out a bull indicator since 7:05 a.m. and from that moment forward into the bell and after the bell, there was a continuation of strength. The inflow stayed above the midpoint as you see there in the chart, and call options went up 150% plus within an hour, guys. If you guys want to receive this clarity and edge over the charts, check out the link down below in the description to the Discord, and we look forward to having you join us. And we strive for opportunities like these every single day. Let's jump into these charts. So here we are with the SPY, the S&P 500 index. And as we stated on Friday, it looked like it had strength to create that staircase effect here due to the fact that it never came back down to the lows. It was still above it. And if it could bounce off of it, it was going to try to push up higher. And it was in a very tight range here between the support of 357 and also the resistance up here of around 362, and that's where things basically opened up today, found support and bounced off of. But we have some key resistance levels to talk about and how significant this all is in the bigger picture. And a question mark everyone's asking themselves is this the 52-week low? Is that the bottom for this year? And is that going to be the bottom for this bear market? So we're going to cover that in today's video as well. Now in today's video, I'm going to pull up the bull and bear indicators, which you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots and becoming part of a growing community of investors, all using these resources to maximize within the volatility, whether stocks are going up or going down, and you can now gain access to it as well. And I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation within the volatility of the markets, whether stocks are going up or going down as well. So here we are with the SPY on the 30-minute, got that bear indicator early on in Friday's trading session, and outflows crossed the midpoint as you could see there, going lower, stayed below. And today we got a bull indicator early on in the pre-market, inflows crossed the midpoint back up, and you could see the full strength here. But right now there has been some outflows here, but we're still above the midpoint. I'm going to be watching that very carefully. And if this bull indicator can continue to hold true and not get canceled by another bear indicator, if there's a pullback in the process, right? We want to see this actually hold up and stay with this canceled here, and the bull indicator continues to dominate. And we want these inflows that crossed today going into the opening bell to continue to hold strong and not allow these outflows to cross back down, because then it could start reflecting into the chart, and then we have to watch vigilantly if a bear indicator is going to pop up. Right now we have a bull indicator, but not just on the 30-minute, we also have one here on the 1 hour, and the inflows have crossed and they've actually slightly slowed down, but they haven't switched from green to red. We want this to actually go ahead and continue higher and pull further away from that midpoint, because anything back towards it or crossing it could have a major effect over the chart, guys. And this bull indicator today, going into the market hours, actually canceled out that previous bear indicator. Lots of volatility here in the last week and last several days, but right now inflows are dominating. And then on the 15-minute within the volatility, outflows are really close though, but inflows are still dominating. We need to watch this stay above, find support here and pull back upwards, because if it crosses down, the question mark is, could it roll over into the 30-minute? And I'm going to have to watch that very carefully. That's the key thing I'm going to be watching going into tomorrow. But let's talk about what made the stock market go higher like it did today. And is this the bottom, what we saw last Thursday here at 348? A lot of people are actually stating and speculating on the fact that that could be the bottom for this year. Now, if they're right, that's one part of the puzzle. The bigger picture, though, of things is going to be more complicated. So we're going to break that down in today's video. But quickly, I want to show you guys the critical levels I'll be watching going into tomorrow, and then we're going to break down the bigger picture. So the first thing is we want these bull indicators to hold true on the 30-minute, the 1 hour, and on the 15-minute. We want to stay above the midpoint here. We do not want this to cross to the downside, specifically on the 15-minute, because it could roll over into the 30-minute. And we want this 30-minute to switch from red to green, push upwards, further away from the midpoint. And based off the history of the chart on the inflows that happened on Thursday, this actually still has room here. The highest it's gone is 6.9 on the inflows, and inflows reached on October 13th all the way up to 1543. So something to keep in mind. Now, the first support here is 364. We definitely want to stay above that and bounce off of it if we retest back down towards it. And then to the upside, there's been multiple rejections here in the history of the chart around this area, and that is 367. And today, it's rejected it multiple times as it tries to get to 368. We definitely want to see this get back above 368, push above it. If it can, 372 is the next resistance. And then above that, the highest level that I'm watching right now is 378. So something to keep in mind. So those are the key levels to the upside and downside within this volatility and going into tomorrow. But let's talk about, is this really the bottom here, or the bottom for this year, or the bottom for this bear market, right? A lot of people want to know this. Is it over? Because we're bouncing off of this really quickly. And the last time we got to these lows, which we actually hit a new low recently now in October, was way back in June. And a lot of people thought that was the bottom and we wouldn't see anything lower. So we're going to break that down here in today's chart. So here we are with the SPY, and you see it here under a bear indicator, right, on 42 vision. And here we have lagging indicators. And nearly every single time that things have overextended, like you see here back in 2020, either we bounced off the purple line area, or when things actually capitulate, we've actually bounced off here the light blue line. Now, in the history of big bear markets, we've actually gone below it for a very short period of time, and anything below that area, whether it's for a few months or weeks, have turned out to be very close to the bottom of most bear markets, right? So if a lot of people continue to compare this bear market, quote unquote, to the previous ones from 2000 and 2007, well, we still have room, right? And currently right now, we have not bounced right back up really quickly like it happened here in 2018 or the 2020 crash. If not, we're actually rejecting off that area of the purple line, coming down towards the blue line, and we need to see, are we going to capitulate right at it or break right below it and go even further down? And that's where a lot of these bear market analysis ratings and those experts coming out and stating we have another 20% drop, 30% drop from here is coming from, right? Because of the fact that 306 right here, if we touch like history has shown in 2020 and other times in history such as 2011, or we break below it, that's where they're getting their analysis ratings from, this specific number. And if you research any article and any analysis price target right now to the downside on the bearish side of things is between 3,200 and 2,900, and smack in the middle is this light blue line here of 306, which is near 3,000, right? That's the S&P 500 level that a lot of people are talking about. Now, the reason why these lines are lagging indicators and just great for technical analysis and not within the volatility is, as you see here on the 1 week, we've had a bear indicator since January. It lasted to the June lows. Things came back up, and with our inflow versus outflow, this bull indicator turned out to be a fake out, and now we're pulling back downwards, and we got our second bear indicator. And if the last one lasted for several months, do you think this one will last as well? We'll have to see if this double bottoms here, because we're pretty close here to having a double bottom here. And if we actually bounce off of this with strength, the real resistance that's going to be critical is up here at the 430s, and that's going to take a lot of strength. So we'll have to see what happens, or if it comes back up and rejects the 400 area or 390 area, it's going to be critical. We need to see how things play out, but volatility, in my opinion, is here to stay and will continue. And within this volatility, there's opportunities to maximize. And for now, it's all volatility, all these moves. And also we have midterms coming up, so the markets could be pushing up in sympathy of that as well. We'll have to see how things play out after that as well. That's going to be critical, how CPI prints come out and what the Federal Reserve is going to continue to say, right? I look forward to seeing your thoughts down below. As always, guys, thank you guys so much for watching, and let's make some money.